Well, hello everybody. Welcome back. This is Seth Martin, and this is the Middle Class Investor. We had an up week, pretty strong week in the market, and the market just keeps going higher. The interesting thing I think about the market right now is that the press is just clamoring. And I think it was Tom Sosnoff used to say, when the ducks are quacking, feed them. So it feels a lot like the ducks are quacking to me, but that's a little bit of prognostication. What I want to do today is just talk about what we see. And so what we see is a strong move up here above this trend line, this short-term trend line, and we had a pullback here the last few weeks ago that ended, and to me it looks like it's not complete. Now we do have new highs, so new highs could indicate that the pullback's finished, but it just seems like there's more to pull back here, and so I'm playing it pretty conservative this week, looking for a pullback into this area here, potentially lower, but at least into this channel, the lower part of this channel. Which would take us below 2400. Now that may take actually this week and next week and maybe even the following week, maybe 3 weeks, given what we see here. We see 1, 2, 3 weeks, and then 1, 2, 3 weeks. So we could get a situation where it kind of opens down a little bit, but then runs up and then sells off. And then follows through with some down candles. So you could have something like that. But like I said, there just seems to be a lot of bullishness in the market, and usually that doesn't last long. So I'm just playing neutral to bearish this week, neutral to down, and see how that works out. Now, some of you might realize my chart is completely different, and so I just want to tell you that Thinkorswim got rid of profit charts. That's the one with the white background, and even though it still looks like profit charts, and that's only because I can come over here and I can change, the preferences to, like if I wanted to change them to dark, there it looks like the Thinkorswim charts. So they've basically replaced the profit charts with Thinkorswim charts, and so is it classic or cream? I guess it's classic. So what's happened is all my studies, all my lines, all my drawings, everything's gone. I mean, they just wiped it out. So I had to kind of put some channels in here real quick, and I'll explain. Let me put some 20-year data on here and I'll explain. So this is kind of the wave 2 low here, and this is what I'm calling the wave 4 low. So what I did is I connected the lows and then just ran this up to the top of this wave 1 high here, and I got my large channel, and then I did the same thing on the smaller move up here, the smaller 5-wave move up that we're watching inside of this channel. So when you zoom in on this, this is the larger degree channel. This you can see it highlight when I go over it, and then this is the lesser degree channel here. So when we zoom in on it, what you're seeing, well, you don't even see the upper bound of the higher degree channel. You only see the lower bound, which is right here. Whoops, that's the wrong tool, which is right here. And then this is the lesser degree channel right here. So most of the charts we look at today, at least with the white background, are not going to have many lines drawn on them, just because that all got wiped out. So when I'm looking for a pullback here, I'm looking for a pullback to the lesser degree channel. It could break through this a little bit, but I would say if we get into here, that's probably where we want to be long if we get a pullback, if we're not long currently. I still think there's going to be one more high up here. I could be wrong. I mean, we could be topping right now, but it's not necessary to make a new high. But I still think it's probable. So I'm going to keep looking for it on here until the charts tell me differently, and hopefully that's okay with everybody. So since my drawings are all gone, my watch list was all contaminated and torn up too. So I've got the VIX, and I've got some of the things we've been looking at, but you can see there's just no drawings. We can put a drawing in here. We had this breach down below here, the VIX. We also had this this descending trend line. It's we're still kind of wedging into, and this is all arbitrating, draw it wherever. But if we bust out of this on the VIX, it's probably going to be some fears going to hit the market pretty quick, I would think. Let's look at the 13-week Treasury. Looks like the Fed, should be slowing down a little bit. Let me do that. Take the log off. This is just bad data here. This long stretch here, but you can see we had a pullback in the 13-week Treasury. Let me scooch it over a little bit. There we go. So we've had this pullback in the 13-week Treasury. Now we're getting some sort of rally, but we'll probably pull back a little bit more. This doesn't necessarily trade like the markets, but I'm kind of in the habit of doing the zigzag, so it could be that we get a little bit pullback a little bit further. And this is telling us right now that the Fed won't raise rates, but certainly if this turns up and starts going back up again, it likely means that the Fed will raise rates. But the Fed is closer to a tightening cycle or a raising cycle than most people think. I think the Fed's going to catch them a little off guard. I don't think people realize how difficult it's going to be for the Fed to unwind this bond position they have. They own all these what they call assets, but what they are is they're paper assets. They're not real assets. I mean, you could argue that the mortgage-backed securities, there's real houses behind that, but the security itself is a security, and it trades like a stock. So it goes through waves of liquidity and up and down and so on and so forth. Anyway, they've got to unwind those positions, and I just think it's going to be a lot more difficult than a lot of people think, and it's probably going to lead to just a complete calamity in the financial markets. But that's what government does. They get in there. They say they're improving the situation for everybody, and really what they're doing is just making it worse. And then once they destroy it, then they're going to have to come in and fix it, and that's just the cycle. Okay, here's the 10-year Treasury. Again, I don't have all my drawings and stuff on there, so I apologize for that. Let me put on a different so I can get, there we go, so I can get some lines. So we filled that gap. We've talked about that. We had a couple different lines on here. We had the gap, and then we had kind of the midpoint of this large white candle, and we said that it could pull back to that large white candle, and it still could. Even though this is downtrending and it looks like it's lifting off, it still could. This is the only low. In other words, if it, let me show you what I mean. If it looked like this, and then pull back to say here, and then looked like this again, like that, then I would say, okay, well, here's a low and here's a higher low. So, there's good chances that this downtrend line is over. But right now, this low is the low, right? There is no There is no lower low or higher low yet because it hasn't pulled back yet. So what we might see is it might pull up and then pull back to a higher low, and then we can say this would be a good place where we could definitely say, look, got to be out of bonds, because we're expecting this to really take off this way. And the timing of that is tricky. And so, I've been calling for, get out of bond funds for a while. And certainly, last week wasn't so good for bond funds, but the previous 1, 2, 3, 4, 5, 6, 8 out of the last 9 weeks have been really good for bond funds. So if you've stayed in, congratulations, you've made money. But if this takes off in a big way, you're gonna give it all back for sure. So all my I added some new stuff here. All my countries are, all that's messed up too. So I added a few others. Here's Brazil. Here's the previous low and swing into a previous high, which is here. So, potentially we're at resistance, maybe not. Looks pretty strong to me. I would say, unless this really broke the downtrend line. In other words, if you're trading Brazil, sorry about that, I'm hitting the wrong buttons here. If you're trading Brazil, I wouldn't try to do anything on the short side until it actually broke this. You might wait for it to do this and then kind of retest, that area underneath this trend line, and then maybe look short or something. But I wouldn't do it as long as it's above this trend line. That looks pretty strong. Germany. I think these are different. I can't remember what symbols I was using, but I think Germany is the same. We were looking at Japan. I think Japan's broken to new highs. Yep. United Kingdom, I think, still has not. Yep. So this is the chart we were looking at in the United Kingdom. Still looks very overlappy and corrective. But I've added a few others here. We've got Hong Kong. Now Hong Kong, China is buying stocks in their market. The actual central bank is buying stocks, so they're kind of in prop-up mode of their stock market. So that's a lot of what's going on there. I thought I had one more. Is it Brazil, Germany, Hong Kong, Japan? I thought I had China. I guess China's down here. So then the other thing I did is I put a list of sector spiders in here. So we got the material sector, the XLB. Let me do this real quick. Let me add, let's see, 30-day moving average would be like a 5-week moving average. So let's do studies, apply studies, do simple moving average, might be under moving average. Yeah, moving average simple. And let's change the color for sure. Let's make that blue. And let's make that's fine. Let's make this 5. Because the 5 is going to be like a 30-day moving average. It's pretty faint there, but yeah. So anyway, it's above the 30-day moving average. So until something gets below a 30-day moving average, it's usually not worth getting too upset about. So here's China. You can see it's very, very strong, very above the 30-day moving average. Let's see what's next. We got consumer discretionary. It's kind of neutral to down a little bit. Consumer staples is down to neutral. This is the energy sector. It's down, as you might imagine. but it's rallied a little bit in the last few weeks. This sector is the financial sector, which has been down the last several weeks, but has rallied a little bit last week. And then this is the healthcare sector, which I'm sure you've been hearing about, biomedical, biotechs and things like that. It's been up the last several weeks. And same thing with the industrials. So everything looks, pretty solidly up. The thing that's interesting about this market, though, is utilities. Utilities don't do well when interest rates go up. So we've been pulling back a little bit in interest rates, and that's caused utilities to lift a little bit. But when we do get a rise in interest rates, the utilities definitely don't want to be in utilities either. That's kind of like being in bond funds. I need to put some other moving averages on here and things like that, but I don't know. I need to figure out what I want to do. I've had those other charts for so long, and I haven't really. I'm not really used to manipulating these moving averages and stuff because I've just always had the same thing for so long. So, but I'll give it some thought between now and next week, and get some drawings on there and so on and so forth. So we'll have a little bit more to talk about. Let's go to the other. Whoops. It's not what I wanted to do. How do I close that? It's interesting. It won't close. Well, that's okay. We can just leave it up. But we'll go to the other charts. Oh, I guess that's how you do it. There's just some things that are a little bit different about this, it seems. Maybe it's just me, but let's look at let's get on a weekly first of all. 20-year weekly. We'll look at Euro US dollar. Still strong, but weakening. Looking for some sort of retest underneath this trend line. We broke the trend line, as you can see here. See here, we broke through the trend line, and then now we're kind of gapping up and kind of testing that underneath side of the trend line. I suspect we'll be pulling back to at least in this area below this pivot right here. So somewhere along in here is where we should pull back to. So we'll keep an eye out for that and talk about it when it comes. Of course, that means the dollar is going to get stronger. The dollar is kind of hated right now, so I wouldn't be surprised if we get a pretty good sell-off in the euro, pretty good bump in the dollar. Let's look at, did we look at oil? I can't remember if we looked at oil, but here's oil. We looked at the energy sector, I think, but this is the futures for oil. And you can see, looks like we're kind of finishing out some sort of correction here. I'm expecting oil to pull down here, so if it's going to do that, it needs to do it pretty quick because you can kind of see the corrective move here. You can see maybe this going a little higher and then right down into this area down here. So, but it's like I said, it's going to happen pretty soon. I would say if the dollar strengthens, then this will happen fairly soon. So I would wait to go long oil and oil stocks if you can hold off. See if we get a pullback into this this support area. All right. Look at gold. Gold and silver continue to not do different things, but just do them at different rates. So you can see here last week we had a pullback in gold. Again, it's hard to see how this is going to make it all the way up here if the dollar gets stronger, which I think it's likely to do pretty soon. But it could be that I mean, the dollar and gold are not always perfectly coupled, so it could be that we still could get a move up into this area. And then of course that would be, maybe what it's doing now is it's pulling back a little bit, and then we get a run up into this area. So I wouldn't sell gold here. I wouldn't be short gold, but whether or not it gets all the way up to that area is a little bit suspicious. I'm skeptical, I guess, is the best way to say it. You can see here on silver, it pulled back last week too, but see how much further it is away from the pivot? I mean, that's a long way to go. So I just don't know if that's going to happen or not. I mean, it may go maybe to here and then roll over. It's hard to say. It's easier to be a buyer of gold and silver when you get kind of this consolidation at the end of a move, and you can just kind of buy anywhere in here. But when you get this run up and then a pullback that might be incomplete, I mean, it can pull back to here and then run up. I mean, it's just really hard to say. Certainly, if you're going to be long gold, I'd wait for it to pull back a little bit here. Maybe next week or two, let it pull back and then see if you can get in. You don't want to chase it. That's the thing. As soon as you pay up for something, you end up getting whacked in the market. That's kind of how that goes. Let's go over to Ninja Trader and we'll cycle through some. Now these are daily charts. I just wanted to show you that on a daily chart, we're in resistance area for, this is the ES, which is the S&P 500, the YM, which is the Dow. Spread that out a little bit, that way it's a little bit bigger. So you can see we're in DP resistance area for the Dow. And you can see we got a little further to go for the NASDAQ to get into that DP resistance area. But I would say that's likely to happen this week. We'll probably open up a little bit this week, and then my guess is probably sell off Tuesday, at least for a few days, and maybe for the rest of the week. We've already looked at oil, but there's oil again. You can see this is kind of the guardrails. We're expecting to be somewhere between here and here this week. You can see here I got a trade set up, but it's against a blue, what Steve calls a strength band, so you wouldn't take this trade per se. But this was the last swing into the low, so you would get a DP off of this, and you can see that it's not quite in resistance. You have to go a little higher to get into DP resistance, at least on a daily time frame. On a weekly, it would have to be further up here. I got this is the 10-year bond here. Scrunch this. I don't have a lot of data on here, but you can see we had this move down. You can kind of see like a 1, 2, 3, 4, 5, and then this is very overlapping and very corrective. So this is all likely to be a correction to this move back here. And if we were to, I mean, just for grins, if we were to do a down wave 3 here, starting back here, we could go 1, 2, 3, just to show you how far this market is likely to sell off, this bond market, and why you don't want to be in bond funds. This kind of move right here is going, God, I can't even get it. It's so big, I can't even get it all in the screenshot here. I mean, we're talking about from here all the way down to here in a typical wave 3. So that is a huge move. We could get a new high. We could get a near-term high into this DP area, because this could be like a little 1, 2, 3, 4, 5 right here, and we could get a pull into here, and then just boom, just get slaughtered right down to 115. This is going to be big losses if this happens. So don't get in front of that train and get run over. With some currencies here. Again, the euro. The euro, I mean, it looks like it could make one more high because this. We actually didn't get into the DP resistance here. It kind of stopped short and then pulled back. So maybe there's another high in its future in the euro. The British pound looks very strong, but then sold off. So that looks like that's setting up for some sort of reversal. The U.S. Canadian dollar looks like it's trying to bottom out. We should get a move probably. My guess is up into this area off the previous fourth wave. U.S. dollar, Swiss franc, chop, nothing going on there. U.S. dollar, Japanese yen. We've got this. Okay, so how do you know which deal to get on here? So we've got this last move into the high, this last swing right here. This was the high, and this was the beginning of that move. So we would take a DP off of this low. And you can see that we're right there in resistance. And so this trade's already happened because the rule is you go back to this fourth wave low. Now, it doesn't mean it has to stop there. It just means that you wouldn't want to chase it because it's already made its move. But it could go a little higher and then pull back. And, it could be the first wave in a series of ups, or it could be the first wave in a correction of downs. I mean, you don't really know. That's why these trade setups are taken at these extreme areas on the chart. You could look to be short here, US dollar JPY, but I think it'd be better odds if you waited until it got up in this area before you took a short on that. Australian US dollar. You can see that it's in DP resistance here. If I click on this, you can see it hit DP resistance and immediately sold off. And the last swing into this high here was from this low. So the likely place for the market to go to would be right into this DP area. So we'll keep an eye on that as well. The bigger thing, I guess, is just the S&P 500. It's the boss, and I would just, continue to be careful. The if you look at some Fibonacci stuff, drawings on the wrong deal there. Let me just go to here, and if you go from the high. The wave 3 high, which is one of these, let's say it's this one, to wave 4 low, which is right there. We're already at the 200% area, so it's just it could go higher. It could go to the 261.8, but my experience is 200 usually stops a trend cold. So we'll keep an eye on it, see if that's what happens. If it doesn't, we'll adjust accordingly. But I would say the odds favor, the market stopping in and about here and turning back down. All right, everybody, I guess that's it for this week. Just like I said, neutral to bearish this week. And, might want to tighten up your stops a little bit if you're long certain stocks. But overall, the market still looks fairly strong. I just think we have another down up sequence before we get really weak. So, all right, everybody, hope that helps. Talk to you next week. Goodbye all.